Welcome to the Mentor Podcast, where the most highly motivated entrepreneurs come to get their weekly dose of financial stability with host Ron LeGrand, as well as other nationally recognized thought leaders who will teach you how to get, grow, and protect your wealth.
Well, hello, everybody. This is Ron LeGrand with another edition of the Mentor Podcast, where our objective is to help you make more money, make it faster, easier, keep more of it, and retire rich. We do that with a series of interviews by qualified folks like we have on the phone today named Keith Baker. And our subject today is money. Hello, Keith, and welcome to the podcast.
Hi, Ron. Thanks for having me.
All right. Why don't you tell us who you are, where you're at, what you do, and then I'll hit you with a series of questions.
Okay. Well, my name is Keith Baker. I live in Houston, Texas, and I am a private lender. I have a day job that I really like. I also have a piece of that business. So it's really not a corporate day job that most people want to get away from. But I do also enjoy real estate investing. So I've found that private lending is ideal for my life situation. I do a lot of travel for my job, and I don't have time to mess with contractors or tenants or even property managers. So I prefer private lending, and started a little podcast to just give some audio examples of people how to stay safe, how to mitigate risk, and how to do it successfully. I think we're on the cusp. Oh, sorry.
What's the name of your podcast while you're mentioning that?
It's the Private Lender Podcast. You can go to Private Lender.
That's original.
Yeah, thank you.
Did you think of that all by yourself?
I did. I was at a 4th of July picnic.
All right. All right. So I think first we ought to make sure everybody understands what private lending means. That means no banks.
Correct.
So why don't you describe what you do? Well, first, how you get paid, what kind of terms you would charge somebody borrowing money from you, and maybe even where you lend and where you don't lend.
Sure.
This is an educational call. It's not a call where you're trying to lend people money, but if qualified, they need to get a hold of you.
No, and right now I only lend in the state of Texas, because Texas is a very lender-friendly state. We have deed of trust and non-judicial foreclosure, which means I don't have to go to court to foreclose if somebody doesn't pay on my note. So a typical scenario of one of my loans is there are several, as you know, in Houston, there are several qualified and successful flippers and landlords and real estate investors. And let's say they have a house, they want to fix it up and flip it for a retail sale. Mm-hmm. I will, 9 times out of 10, I will loan the money to them out of my self-directed IRA for the purchase of that house. I will pull some money back for the repairs, keep that in escrow, and on a predetermined schedule, an inspector will go out, confirm the work has been completed and it's completed satisfactorily. Then I'll release more money to that investor. And at the end of the 6 to 12 months, normally when they sell, then I get my original investment back. I get my interest and any back end points if I charge on the back end, or usually the points are on the front end, but sometimes I'll do back end points as well. And the rates really are deal specific, in that I like a solid 12% base on my money. And that just comes from the rule of 72. If I can get more, I will. However, most people know that the thing about private money or hard money, which, private lenders sit in between banks and hard money lenders as far as their terms. Speed is our biggest asset that we have as a private lender, being able to fund a deal quickly. And if they're really a hustler, if the borrower is really a hustler, they're not going to quibble over a point or two or some interest basis points here and there. So,
well, the biggest advantage for them from you is that they can get the money from you. They won't get it from a bank. House needs renovated. Bank's not going to loan money on the house if it needs renovated.
No.
And besides, even if they do, they're going to want them to bring a big old huge down payment to the closing table. So
20 to 30%. Yep.
It's not the cost of the money; it's the availability of it. And frankly, if anybody thinks 12% is high, I mean, how long is it going to take you to buy and rehab a house? 3-4 months. So who the heck cares what the interest rate is for 3 to 4 months? It's very, very, very small amount of money. And I might point out it's a whole lot cheaper than a partner.
Oh, I do that. I do that too. If you want to give up 50% of your project, I'll be more than happy. to loan you
Yeah.
some money, and we create an LLC. Yeah, and in fact, I'll give my phone number to anyone out there in America who wants to do that.
Keith, you remind me a lot of me. I used to make those kind of loans that you just described. I made over 3,000 of them back in my younger days. So I know exactly what you're doing. So tell me, why are you doing it? How'd you get started in this private lending thing?
So I'm a lifelong slacker, underachiever type of. I didn't do well in school. Certainly didn't do well in math. I couldn't care less about it. And a funny thing happened on the way to growing up is that I had to grow up. And when I was in college, I was fortunate enough to go to university, and I basically put myself through at the end by working construction and learning the trades of how to build houses. I've always enjoyed real estate. And then when real estate investing became, on my radar, I said, this is really great. However, I have a job. I was in the oil field. Now I'm in oil field insurance, and I've had jobs that I enjoy, but they prohibit me from being able to, go meet a contractor or go meet a seller on their schedule because I'm oftentimes tied up in an airport somewhere. So someone had mentioned to me, well, have you ever thought about being a private lender? And I saw at one of the local RIA meetings that somebody had put a flyer up saying, hey, learn how to invest with your self-directed IRA. And there was a IRA custodian. I started going to their classes. And after the first one, I said, oh, wow, this, they keep telling me this is legal and sanctioned by the IRS. This is okay. So then I brought my wife. And then once she, I got her over the hump, she's like, oh yeah, we should probably convert some of our old 401ks into these self-directed IRAs. Well, I didn't ask anymore. I just kicked down the door, started rolling over, I should say. And then learning due diligence, looking at a loan as if I was that flipper myself. And right. I did have that background. So I was fortunate in that aspect. But then I started meeting other people who were extremely successful investors, landlords, flippers that, were in the medical field, couldn't swing a hammer, and I'm like, wait a minute, these guys are rocking and rolling. And, couldn't tell you the difference between a 10 penny nail or a wood screw, but they were successful. And so I just put myself in proximity to these people and listened as much as I could and tried to ask good questions to learn sort of the process, and, leaned on that IRA custodian for guidance as deals get a little more sophisticated. And then that turned into meeting attorneys. Yes, I do have attorney friends, I will admit it, and they're welcome at my house anytime, but only a few of them. But getting with them to learn about the documents, the process, and protecting myself. And that's really how I got into private lending. And then all of a sudden I didn't advertise. I was just known as a lender. So my emails would, I get emails and text messages and calls from people that said, hey, so-and-so told me that you're a lender. Do you have any money, and what are your terms? What are your rates?
Right. And borrowers beget borrowers, don't they?
They do. And then
they just come.
It's a beautiful thing.
By the way, for our listeners, I can hear their brains going around right now. Well, gosh, I don't have the money to lend out, but hey, if you're bankable, your bank certainly does. I've seen quite a few people go get as much credit line as they can, whatever they're charging, 4% or so, and then lend it out at 12%. And actually kind of turn the tables around on the banks. In other words, we spent all of our life putting our money in their bank account so they can lend it out and get the spread. Why don't we use their money and let us lend it out and get the spread now? So obviously, if you're bankable, there's plenty of money available. So this private lending thing is maybe not your full-time business, but certainly a way for you to make a lot of money doing nothing, pretty much nothing. I see you're using your IRA, which means it's tax-free. Yeah, I assume it's a Roth you're using?
Yes, sir.
I mean, it's tax-free forever. Since you're in Houston, I'm guessing you're using Quest IRA.
That is correct.
That's
I am using Quest.
Same company that I use. My IRA is at Quest IRA. It's questira.com. In fact, not very long ago, I visited their facility out there in Houston, and they got a great facility there in Houston. So if you happen to be in that area, you might want to look them up, questira.com, because they do trainings every single Tuesday, and they're free.
Free trainings.
Great company to work with. They're also in Dallas and in Austin as well.
Yes.
And I'm in Florida. And they got my IRA, so it don't make any difference where you're at. And they come to my events and tell everybody why they should have an IRA. So anyway, if you're not using an IRA for your investments of all types, including buying and selling real estate, you ought to look into it because it's a gift that the IRS has given us, tax-free, not tax-deferred,
No.
tax-free, using your Roth. So, Keith, how do you make money? Do you make money other than the interest rate? Because not all your loans are 12%. I know they range from 8 to 12, somewhere in that ballpark.
Yes. So I have a partner in Houston, and he and I do. He loves owner financing. So he asked. He wanted some money for 3 years at 8%, and I told him I would do it, but he would have to form an LLC with me. We'd have to go into business and make more money together, not just on the loan. So that has worked out very well. And I tell people, look beyond the lending. Okay, look beyond that 8%, because I know a lot of people who would blush at 8%. Why would you even waste your time? Because I have a successful, I'm a partner in a successful company, a real estate company now, all because I loaned for 3 years at 8% on, and get this, Ron, $21,000. That's all it cost me. And it didn't even cost me. I just loaned out 21 grand for 3 years at 8%. And I waived the points in exchange for an LLC with cash money outside of my IRA. So that's just one avenue.
What points would you normally get?
I try to get 2 points. It really depends on the experience. If you know who Ray Sasser is in Houston.
Oh, very well.
Okay, yeah. And I hope he doesn't hear this, but truth be told, I would loan Ray money without points. Easy.
I won't tell him.
Yeah, thank you. But there's a trust factor. He's done 1,000 rehabs. He knows what he's doing.
Yeah.
And he's a straight shooter. This, someone without that kind of experience, I'd like to get 3 or 4. It really, for me, it's points. I look at points not as a function of the risk I'm taking on, as it is the points for me are what's my time worth? What's it worth for me to do the due diligence on the deal? And then the interest is what I look at for the risk.
For those listening that don't know what a point is, it's 1% of the loan amount.
Correct.
So those points get paid out of closing. They don't write you a check for them up front. They just come out of the proceeds. Okay. A couple of things. First of all, I want to get back to, I'm not in Houston. Why do I care? And why should I be thinking about being a private lender? But before that, our listeners ought to know that I've made over 3,000 loans like Keith is doing, and I used to get 15% interest, 5 points, plus 3 months interest prepayment penalty on the back end. And I'd keep the points. My lenders would get the penalty and the interest. But, that was back when our rates were higher. But honestly, over 15 years of doing that, I never changed. I never wavered one bit. We never had any problem getting rid of all the money that I wanted to get rid of, because, again, it's not the cost that's important, it's the availability of it. So these people borrowing this money are making thousands of dollars by being able to buy the house, rehab the house, and sell the house, and not have to go to a bank and go through all that crap. Can you imagine having to go to a bank every time you want to do a rehab? First of all, you'd be very, very limited. Second of all, they're not going to lend you the money. If they do, you're going to be way short. You're going to have to come out of pocket with a ton of money. And then you personally guarantee, and it shows up on your credit report. So, obviously what you're doing is for filling a great big niche. But you want to say something?
Yeah, you brought why would somebody in, say, Rhode Island or Connecticut or California care about this? Because private lending is to me, it's the best alternative investment there is. Okay, you don't need a bank, you don't need a stockbroker. You can get better money than you can at a bank. You're going to, as far as earning your money as being a lender, you're going to earn a lot more money lending on real estate than you are in any type of money market or CD.
Sure.
If this was 1982, my script might be a little different, Ron. You say, you know what, maybe you should go get 16% in that CD, because it is backed up by the FDIC insurance program. But today, no. Rates have been so artificially low, you're losing money by keeping it in the bank.
That's true.
You're losing. And this is, if you, let's just assume 3% inflation rate and your money market account's giving you 1%, then you've already lost out on, you're losing money at 2% clip a year.
Correct.
Right?
Yep.
So there's
the
that.
bank knows this.
Yes.
Yep.
Yes. And so,
all right. So let's look at it from a point of view. Okay, I'm in another state. Well, first of all, do you loan just your money, or do you loan other people's money as well?
At this point in time, I loan just my money, but I am in the works to loan others, to broker money out.
All right. Yeah. All right. So let's say you're in another state and you have an IRA or any other investment capital not getting you a high rate of return safely. Becoming a private lender is just a matter of deciding that you want to learn the ropes, which aren't that many to learn. The big keys. Let's talk about the mistakes private lenders can make here, Keith, because I know them all. I've made over 3,000 loans, and I've been screwed every way you can be screwed as a private lender. I think I don't think I missed any.
For me, my personal rules are a few things. Number one, I have basically 3 rules, and I'll try to keep it concise here. Number one, ROI is the most important thing, and that does not mean return on investment. That means return of investment. So if I'm going to loan $50,000 out, my first priority, number one, is to make sure I'm going to get $50,000 back. Right?
And how do you do that?
Documents. Yeah, I have lawyers that document everything that tie that money to that piece of property. So
sure.
If
only an idiot would loan without a mortgage or a deed of trust attaching the loan to the house. So it is secured by the property.
Careful, Ron. I have been that idiot before, but yes, we all learn in our own way. Right?
This is called training, Keith.
Yes, exactly.
Okay.
So
all right.
I have that. The other thing
is, what you just said, I'm going to interrupt. What you just said was, and I agree with this one, is that the most important rule of private lending is loan-to-value ratio.
Yes.
Because that's really the only way you can be sure you're going to get your money back. What's your loan-to-value ratio?
I prefer no more than 65%.
And that's exactly mine, and it has been for 15 years that I started lending, and ever since. And that's 65% of the after-repaired value, folks, not of the as-is value. Honestly, I could care less what the as-is value is. I would make loans based on the ARV, but then I would hold the repair money in escrow and release it as the repairs were done. I assume you do the same thing, right?
Absolutely.
Okay, so that means we're never above 65%. And honestly, because I know some people are thinking, wow, how am I ever going to buy it that cheap? Well, the truth is, if you're not buying it at a price that you can borrow 65% and cover the purchase and the repairs and holding costs, then you're paying too much for it. It's really just that simple. You're paying too much for it. And when you make that mistake, you're not going to be able to make it up in volume.
No.
So you better learn how to buy. Come see me in my 4-day quick start school, and we'll make sure you know how to buy right. Because honestly, I'd rather you not buy than overpay for the house. Well, and in that, like Keith, we're in a world right now where we got such a hot market. There's a lot of greater fools out there grossly overpaying for houses. Watching too much reality TV, I guess.
The LTV being number one, the return of your investment. Number two, do not chase risk with interest rates. So if you don't raise your interest rate, well, this might be a little risky. Demand that person put skin in the game. If it's a sketchy deal, number one, it's not a deal. So I wouldn't put my money into it. But if you're hell bent on, I'm going to do this deal, don't raise the interest rate and chase the risk. Make that investor, that borrower, put more skin in the game. That way, if it hits, going back to your LTV, and those two are really the big ones there. Getting your ROI and your LTV right, and keeping skin in the game by not chasing.
You're correct. Raising the rate doesn't mitigate the risk. You still got to get the money back regardless of what the rate is. So
exactly.
I tell you, the next one is make sure your value is correct, and that's where you want to be in control of that appraisal. And make sure that the appraisal's coming in with a conservative, real appraisal, and not some hyped up thing some borrower talked them into doing. Obviously, if you value comes back way high and you make a loan based on that, then you're well above 65% LTV.
Oh yes. Oh, and I've done that before. I've been at what I thought was 60%, and truth be told, I was at more like 85. So right. I have now I give the borrower a choice of appraisers that I've approved. Basically, they do a lot of work for banks, so they're used to they don't care what the rehabber says it's going to be. I always demand more than the 3 comp. I mean, give me 5, 10, give me as many as you can in a half-mile area that doesn't cross any major streets. And then I kick out all the fluff, the highs and the lows. And then I usually take the lower end to get my ARV is always going to be a little bit lower, or probably a lot lower than the borrower's ARV, because they're going to have more pie in the sky. We can get this, we can get this.
That's exactly the way it was back when I started in 1982. I got money from a loan broker back then at 18% interest, and his appraisal was always conservative. I just got used to it. It just made me buy better.
Well, exactly. It forces the borrower into a deal rather than putting them into a sketchy, maybe a deal.
Yeah.
Until it keeps the lender safe.
So what else can mitigate the risk as a private lender? Oh, I know one. We better not ever let them get their hands on the repair money until after repairs are done. That's for sure.
No, we do escrow draws for the repairs. Yes.
Mm-hmm.
Never give the money. Fortunately, it hasn't happened to me, but I've heard of people where they had to take over, foreclose on a house, and they're thinking, well, I gave them all the money. It's ready to go. It's ready for retail sale. Like, no, it still needs about another $20,000 to get up to where it needs to be. And that borrower just took off, and that's it. So,
well, I could tell you the story, the rule of 78, if you want. This is one of my seminars.
Sure.
I made a lot of loans to this one couple. They'd buy the house, they'd fix the house. I'm sorry, they would buy the house, and then they'd sell it to a brand new investor type person who usually had a job somewhere else in good credit. So they'd go get them lined up for a loan, then they'd sell them this house after they did the repairs on it. And it worked out just fine for quite a while, several years. And I would make them the interim loan to buy the property and fix it, and then they'd go sell it and pay it off. Well, over time, the relationship got to the point to where I got used to them, and then they started asking me to give them some money in advance to do the repairs with. And so, somehow I got talked into that. I should have known better. But I started doing that. But here's what I learned ultimately before it was over, that they were doing a really crappy job of repairing the house and painting over rotten wood and things like that. And these poor unsuspected buyers would go get a new loan on it. Next thing you know, they discover all these repairs. They couldn't handle it out of pocket, and these loans started defaulting right and left to the lenders that made these loans to these folks. And then my loan started defaulting right and left, and I took back 78 properties, Keith, 78 properties that I had other people's money invested in. It took me 3 years to clean up that mess. So that's what happens when you outsmart yourself and you start breaking your own rules.
Well said.
Yeah,
well said. That's a rule of 78. That is burned into my brain. Hell of a rule.
Yeah. Trust but verify.
Oh yeah.
So anyway, all right. So from a point of view of somebody listening as to why they should care, because private lending is one of the great places for you to put your money as long as you learn how to do it correctly. And by the way, I have some training on that if you're interested in finding it. It's on our website, on our Gold Club site. And if you are going to become a private lender, you ought to probably think about that. So, Keith, if they go to where do you want them to go to get on your podcast? Because you'll probably let them know when you're ready to take money from outside, aren't you?
Yeah, yes, sir. Yeah, we have nothing right now. The podcast is free. It's privatelenderpodcast.com. You can listen on iTunes, Stitcher, SoundCloud, and pretty much every podcast platform there is. But the website, the website is privatelenderpodcast.com. You can listen there. You get the show notes, and right now it's just free content. I started this, and I really didn't know why I started it, but I wanted to. And just look, I've made some stupid mistakes, and I'm still here to live to tell about it. I still have my wife's IRA, so she's still with me. She hasn't kicked me out yet. So. And I really believe that we are on the cusp of with technology and blockchain. Things are going to be changing so rapidly and so violently. And I just see this great opportunity for normal, everyday people to go and increase their wealth without having to, do the flipping and do all of that. There's no such thing as a passive investment. If it is, you want to stay away from it. But this is probably the most passive real estate investment there is.
Agreed.
And that's why I say I don't call it passive, but it's the most passive. And like you said, if it's just a few concepts to get down, a little bit of mindset in the beginning, then it's just reinforcing that and then executing. And really, it's kind of, it's obviously it's a little more than that, but if you look at it from a 10,000 foot view, that's really just those three pieces.
All right.
And at some point in time, we'll have some training as well. And if I may be so bold, I'd love to team up with you or host something for you here in Houston in the future. So please, I'd love to.
Well, I'm in and out of Texas a couple of times a year doing my 4-day quick start school. And I do work closely with Quest. So sure, why not?
Awesome.
All right. And if you folks listening want to learn how to buy and sell houses, you want to get into this real estate game yourself, then you can go to our podcast. That's called the mentorpodcast.com/free gift. The mentorpodcast.com/free gift. And it just so happens that I have downloaded my brand new audio book on there where you can literally listen to my book, because like me, probably don't want to sit down and read it. I'd much rather listen to one than read it any day. And since you're going to get the link there, you can listen to it on your cell phone if you want to. You don't have to listen to a CD or have something to plug the CD into. And there's some other free stuff on there as well. So that's the mentorpodcast.com/free gift. And it won't be hard to find out all the training that's available through Global Publishing, which is my company. Just go there and it'll launch you on a quest to find out just how fast and simple this business really is if you get the proper training. So, Keith, is there any last words that you want to leave with our guest today about the art of private lending?
Sure. It's probably the best way to invest in real estate if you don't have a lot of time. And it's also probably one of the safest ways. If you do it right, you do your due diligence and you follow your own rules. It's one of the safest forms of investing there is. And I encourage everyone to look into it.
All right. And I concur. All right. Well, I thank you very much, sir, for taking the time out of your schedule today to spend it with us.
Ron, thank you for having me.
Sure, we'll be talking in the future.
Absolutely.
That's all for this edition of the Mentor Podcast. To connect with Ron and learn how you can attain financial freedom, as well as up-to-date strategies to grow and protect your wealth based on today's discussion, go to www.connectwiththementor.com.